Debbie Taylor here with our Market Minute. And so I've talked to you a little bit about staying the course, not panicking, not moving to cash, and how you give up about 40% of your returns coming from the financial crisis to now, even with all these years afterwards of great growth. If you moved to cash and stayed in cash for a year, you still gave up about 40% of your returns in 2025, from then until 2025. Here, I want to talk about timing the market. And there's this expression, right? It's not timing the market, it's time in the market, right? Again, one of those little cliches. But what does that mean? Over the past 25 years, the effect of exiting the market the day after a 2% market move or worse, right? What does that mean? And so it's interesting. If you stayed fully invested, you would have almost $4,500 based on that initial $1,000 investment, right? But if you miss out on even 2 weeks in the market over a 25-year period, like think about that. You'd think, oh, it's 25 years. Missing out in 2 weeks is not going to be that big of a deal. You literally cut that return almost in half, just missing out on 2 weeks. Same thing, you miss out on a month, you're down to about $2,000. And so the idea here then is if you stay fully invested, you almost double your money as opposed to trying to get in the market, out the market, in the market, out the market. And inevitably then you miss some of the best days in the market, because one of the things we learn is that the best days are usually sandwiched in between the worst days, right? And that's called the market volatility, right? Volatility is up and volatility is down. And if you're trying to figure out the best time to be exiting and entrancing in the middle of all that volatility, inevitably you're going to miss some of those better days. And this is what the data is showing us. And so another reminder for 2025, likely volatility will be back, and we need to be thinking about all these approaches and how most of them do not stand the test of time. Okay? Thank you.